Good day, everyone, and a warm welcome to today's webinar focusing on how to meet customer demands in the era of instant payments. I'm Alexia representing Connect Global Group, and it's a pleasure to have you all with us today. This webinar is made possible through our valued partnerships with SmartStream. Before we delve into our discussion, let's take a moment for some housekeeping instructions. You'll notice various application widgets at the bottom of your screen. These widgets are fully customizable, so please adjust them to suit your preferences and optimize your viewing experience. Should you have any questions throughout the webinar, don't hesitate to send them our way. If time constraints prevent us from addressing all questions live, we'll ensure to follow up with you via email after the event is over. Additionally, a recording of today's session will be circulated within the next few hours, so please look out for that email. With that said, let me hand you over to our moderator. Over to you, Adolfo.
Many thanks for the nice introductions. I have the pleasure today. My name is Adolfo Tunon. I have been in the payment industry for over 30 years in different banks like Citi, HSBC, NatWest, Lloyds, and Santander, and most recently as a senior advisor at McKinsey for the payment practice. It's a pleasure for me to present this panel, but we're going to do in a different way this time. So instead of a round of introduction, I will start with introducing each of them at the right time for the initial set of questions. The topic today, as already you know, is driving operational excellence to meet customer demand in an era of instant payments. Instant payment today is approximately 1 out of 4 payments. This has brought a lot of opportunities for clients, but at the same time, a lot of issues at banks, investments, and also at the same time, a lot of hassle that each bank needs to deal with. So today, we're going to bring that aspect, and we're going to go deeper into the current state of instant payment and the future. So let's start with some framework. Already anticipated the number of payments, 1 out of 4. At the same time, it is estimated that 60 to 80 countries have instant payments today in some way or another. But recently has been published a very interesting report, and I would like to invite the first panelist, Joe Jelinek, who is the research director for Kraponasia. And Kraponasia is a strategy consulting firm on finance technology in Asia. Joe is based out of Singapore. Thank you for being so late. Has been with Kraponasia for 5 years. And prior to that, in many other executive analyst and editor roles in China and London. Joe, welcome to the panel. And let's start, if you can color us with more data around the world of instant payment. Joe.
Thank you very much, Adolfo. So let me just give a taster of some of these numbers. We'll go region by region to give you guys an idea. So starting with Asia Pacific. Asia Pacific is the largest regional market for instant payments. It leads with 185.8 billion transactions in 2023. Almost a quarter of all electronic payments are instant payments here in Asia Pacific. India is really the very much outstanding global real-time payments player globally. It saw 129.3 billion real-time payment transactions in 2023. Middle East is the fastest growing market for real-time payments. That's expected to grow from 855 million to 3 billion transactions by 2028. Europe, with the new EU instant payments regulation, where people are going to be able to send euros either within country or to other countries in the European Union instantly. that will see growth drive from 8% in 2023 to 13% by 2028. North America is very much a growth market to watch. That's primarily because of the launch of FedNow service in 2023. That will have a 5-year CAGR of 27.1% from 2023 to 2028. Africa has the highest real-time share of electronic payments in 2023 at 40%, with Nigeria being the real-time payments leader in the region. And Latin American countries are all pushing ahead with their real-time payments and modernization initiatives. They're looking to replicate Brazil's success, which is the second highest real-time market by volume in the world, with 37.4 billion payments after India. Over to you.
Excellent, Joe. A lot of numbers, and really the important thing is to highlight that this is on almost every single region, a very high topic. And precisely, Joe mentioned North American market is a market to watch, okay, with FedNow and other initiatives going on. And this is precisely, let's focus to that region first, about the US and also globally, with two very seasoned practitioners of payments that are in very relevant banks. So first, let me ask Deep Kupchandani, who is the SVP Enterprise Payments and Commerce Portfolio Management for Truist. Truist, as you know, is one of the top largest banks in the US with approximately 3,000 branches and in 15 states. Deepmala is based in the US, has been for Truist for 8 years, and prior to that, several roles in consulting, market intelligence, and software engineer. Deep, based on the numbers that Joe presented, tell us a little bit of flavor. What is the reaction of clients? What are your first impressions of the instant payment market in the US?
Thank you, Adolfo, for that wonderful introduction. I agree with the framework that Joe laid out for us. North America certainly is a growth market. And what we are seeing is a relatively slower adoption when it comes to instant payments. In a lot of discussion within the US is about what are the factors contributing towards slower run rate, even though we have been in the world of real-time payments and instant payments. We have mandates coming in from last couple of years, more predominantly. A primary factor behind a slower customer adoption is primarily because, US is a capital economy. We have regulators who work with the banks and the client organizations, but the mandates are yet not fully commercially viable. So a lot of the discussions with our customer organizations is about how can we find the right use cases and how can we make these more viable form of payment processing, in ecosystem from that standpoint. A lot of the other end of the conversation is also technology modernization and the challenges that come with integration. A lot of the legacy banks in United States really have, outdated, incompatible systems that are not able to scale up and process real-time payments. So there is a need for modernization and just upgrades across the payment ecosystem. So those are the two primary factors. But really, what is less talked about is the broader business model impact for the client organizations as well as the bank. And really, real-time payments, what it means is it's going to pressure test our operations. It's going to pressure test our risk management. And it's certainly going to pressure test our fraud detection and monitoring capabilities. So I would say those are the 5 primary challenges in terms of how banks are looking at in the era of instant payments.
Fantastic. Fantastic. David, would you be able to repeat these 5 points? I think are very important for the audience to take notes.
Absolutely. So it's the customer adoption, working with the customers to find the right use cases and enabling them. The second one is definitely the payments modernization around technology, systems, and infrastructure. We talked about the operations resiliency in terms of ability to scale and safely process the payments, risk management, and I hope Judy can talk a little bit more about impact to liquidity in that breadth, and then finally it's really the ability to process securely the payments around technology.
Fantastic. Thank you very much for mentioning these very important pillars. Already Deep called Judy. Who's Judy? Judy Bay, Global Head of Domestic Payments and Receivables for Citi. Citi is a leading bank with presence in over 90 plus countries. Judy is based also in the US, similar to Deep. Has also worked in consulting at another global bank. Judy, how would you like to expand on this? You have a huge experience, not only in the US, but also in many markets. How do you see this transition to instant payments?
Yeah, so thank you very much for having us. Just to add what my panelists, Joe and Deep has mentioned, I mean, the fact of the payments instant, it poses a lot of opportunities, challenges to all the players in the value chain. Now, aside from the fast growth that Joe mentioned, a lot of challenges posed to the bank, as Deep mentioned, and I'll just add a few points. I think the banks are especially challenged in a way that we are, heavily regulated in each market. And the regulation changes in a fast pace, and also the customers, the clients are also changing to the new business model enabled by instant payments. Now we will see more increasingly higher number of digital native clients and also traditional clients going online for trade and commerce. So that will pose challenges to the bank in a way that, one, we have to make sure whatever changing business model we support need to be safe and sound as well. And that means the cost. That means look at everything in a fresh point of the point of view. And also look at the business models, understand our customers' challenges and the opportunities, and work with regulators in a very close fashion to make sure we are learning by doing as the same team in each market. So I would say it's a very exciting time that we finally see things happen in an instant way, but a lot of challenges ahead of the banks and all the players in the value chain.
Excellent. In the word of Judy, very exciting times. So let's bring the final panelists. This time, this panelist is based in another geography in UAE. So we have panelists from the US and also from Singapore and other places. So let's bring another aspect. We have discussed how analysts and also banks look at this, but let me introduce Roland Brandelli, who is a strategy director for SmartStream. SmartStream is a recognized financial transaction management company that enables firms to improve operational control, reduce cost, build new revenues, and mitigate risk. Roland is based in UAE, has been in the company for over 20 years, across various roles. What is your extensive experience dealing with banks and other players in the market, Roland, on instant payments?
Well, hi, Adolfo, and thank you for having me. I think, one of the things or one of the challenges that a lot of the banks are facing is that these different payment rails are moving at different speeds. And most banks maintain multiple payment rails. So you have cross-border, SWIFT as an example. Then you have the national RTGSs and instant payment systems. And what we're seeing now emerging is a lot of regional instant payment systems. So being able to manage all of those in the same way, potentially in the same piece of software, is very costly and time-consuming, especially as we see with the introduction of new message formats. Everyone has to adapt at a different speed, and they are slightly different. So I think that's one of the major challenges when looking at instant payments. I think the second major challenge is understanding that as soon as you introduce something like instant payments, your customer expectations change. Okay, So up until now, everyone was used to, doing normal payments. It takes 2-3 days. No one would complain. But once you've got used to payments being done within a couple of minutes, your expectations change. And that means it will be much more demanding also in terms of producing operational excellence. Yeah. And the third thing, coming back to Deep, because she mentioned it, it's around liquidity management. So up until now, we're used to living in a world where payments were done during the working day, 5 days a week. Instant payments changes that. You're talking about having payments running 24/7 and a much faster inflow or outflow of funds. And just to give you an example of that, in 2008, when Washington Mutual was impacted by a run, it took about 9 days for the customers to draw down $16 billion. In 2023, when Silicon Valley Bank went down, $42 billion were withdrawn within 24 hours. Okay. And that's the speed of payments as well, which plays a big role in that. Because people don't have to necessarily go to the branch anymore. They don't have to go to the ATM. They can literally transfer that money out with instant payments. And you need to be able to monitor that. Plus, you can't really close that down. Yeah. So I think, there's a big implication there as well.
Excellent, Roland. I would like to pick up one sentence that you mentioned, customer expectation changes. So let me ask Deep and then Judy, because you have a view of the product overall, but specifically about operations and talking with your operation people in your respective banks. What are these expectations that clients are changing, specifically on the operation aspect? Let's go to Deep first.
Thank you. Now, Roland, what mentioned, it's really accurate. What we are seeing from our operations standpoint as well is that the customer is expecting that speed, accuracy, and efficiency. And that's a high expectation to match. In traditional payment forms, we have a couple of hours to investigate, handle the payments exceptions. But instant payments is going to challenge and pressure test that, like I mentioned before. So definitely balancing the customer expectations will put added pressure to our ability to, not only process payments, but also support the customer inquiries, run through the payment exceptions, handle the fraud suspicious activities, and then be able to kind of, return or reject the technical failures around it, right? So overall, from an ecosystem standpoint, definitely we're seeing pressures in the customer facing, which is client onboarding servicing areas. We're seeing a lot of involvement in fraud detection and fraud monitoring areas. That's another extended form of fraud operations, so to say. And then finally, the back end portion, which is really our ability to support the technology infrastructure, security concerns, or be it just general problem issue management. So these are the 5 areas I think definitely are seeing the impact with increased volumes and complexity that instant payments bring.
Thank you, Eddie. Very clear. Judy, anything to add from the operational perspective?
Sure. From Citibank's side, we're processing roughly over 11 million transactions a day. So that's a huge increase over the past few years. And then it's roughly about 40% of all the transactions we process at the bank. Now, what does it mean? It's a huge challenge to the bank to make sure it is processed in an instant way, which is in a few seconds, not a few minutes. We'll have to make sure it's 24/7. In the scheme of things, we have hundreds of platforms in the bank. The end-to-end need to work in the 24/7 manner. And the information comes in a different format. It could be API, could be files, could be a website portal. And how do we handle returns, reject, all that? And clients would want to, the client expectation is, bank, you help me process instant payments. I will expect you to process in a few seconds and give me all the data and tell me the payment status and tell me the reject returns and tell me where I need to change going forward. Now, we are not quite there yet, to be frank. We constantly handle client issues because we are, I'm talking about city side, we are connected to 37 plus instant payment schemes reaching over 65 markets. It's a huge number if you think about it across the world. And there's a lot of different SLAs with the clearing schemes, different liquidity management with the scheme, and customer will have a different setup in each market because instant payment schemes sometimes are mandatory, sometimes not mandatory, and different transaction limit. Many things, many nuances the clients have to manage and the banks have to manage, regulators need to manage. So together, we're trying to really make it work end to end in the instant and 24/7 manner. It's actually a huge challenge.
Judy already mentioned some statistics, so let's go back to the person that knows all the numbers. Joe, among other things, very experienced in the market. Joe, it is my understanding that in SWIFT, it is considered payment exceptions approximately 2 to 5%. That represents 100 to 250 millions. I extracted from your great report. Could you add some colors on what happened with instant payments specifically?
Sure. Yeah. No, that's absolutely right. So, I mean, with instant payments, look, I mean, they are an opportunity for sure for banks. They generate an annual revenue of around $200 billion US. But obviously, with their speed and the volumes, they also introduce considerable complexity. It's estimated that around 2 million transactions are failing each day. And then with an estimated cost of around $50 to resolve each failed transaction, that leads to substantial expenses for the banks. And just to give you an example, in Europe alone, payment exceptions are costing banks around $21 billion annually.
Wow, that's important numbers to take into account. Thank you, Joe. We are going to come back to you in a minute, but let me turn to Deep again very quickly, specifically about the volume and complexity of payment exceptions that you have seen, specifically that aspect. So let's go deeper into that aspect, which is critical for all banks today.
Let's talk a little bit about the impact. What happens when there are payment failures? What happens when there are exceptions, right? I think the most important point in all of this is that there is a trust factor between the customer and the bank. And whenever there is a friction in form of a payment exception or a failure, there is definitely an impact to that trust between the client and whether it's a consumer or a business client and the bank. And I think that's what we at most care about. The consequences of those can mean loss of revenue for the bank, but also it means that there is a cash flow impact to customer or businesses who are trying to get their financial accounting processed, right? So there is definitely loss of business on both ends when that payment failure occurs or there are delays with payment exceptions. And then if you look at what Joe mentioned, the operational cost that comes kind of a burden on the back end to compensate for the failure or the exception, it results in adding more manual interventions, added cost from an operational standpoint. But it could also mean that we are talking about chargebacks, we're talking about fraud losses, we're talking about several bottom line impact for a bank standpoint. And if all of this was not enough, right? If payments are not managed effectively, if exceptions are not handled effectively over a period of time, definitely there is a reputation impact. There is a regulatory compliance that comes into picture, and that could result into regulatory fines and penalties. So from that standpoint, really, end to end, there is a significant impact when we as banks are not able to handle payment exceptions or failures.
Interesting. So this is an opportunity for Roland to expand specifically because Roland, based on your role, you have experience across many geographies, many type of banks, large, small banks. So how would you say that payment failures impact financial institutions in general? From 2 points that Deep mentioned. One is financial, because Deep talked about losses, but also reputational, because this has an impact on the bank. How do you see the overall market acting on these points?
Well, I think it's very true to say that the reputational aspect cannot be underestimated today. Up until now, this has all been looked at as being part of operations, which of course it is. But the thing is, what's happened over the last years is banks have digitalized. And most of the time when they've talked about the digital journey, they're talking about the onboarding of clients, okay? Making it easy to join a bank. Well, that's a double-edged sword. It's just as easy to join another bank now. And so, where before people might have been reluctant to change banks because, it's just your bank and okay, maybe this time they were not good. Now they can change very quickly and they can compare very quickly as well. So it's very much that the customer now experiences exactly how good a bank is operationally. I sometimes compare it with think about taking the suspension out of the car. Yeah. Before it's nice and bouncy, but when you want to go fast, then you take the suspension out and the bumps get really hard. So I think that's really important. It's also a question of cost, obviously. Financially, it costs the banks quite a lot of money to invest in these systems. They have to adapt to different rule books, which is also quite costly. They have to have interoperability between the different payment rails, because nowadays we talk about payment corridors, okay, which is becoming more and more important, also from an AML perspective, a KYC perspective. So all of these things make life a lot more difficult for banks. But let's just always remember, it's also the most common touch point a bank has with their customers. So you can ask yourselves, everybody here and watching this webinar, when was the last time a customer relationship manager got in contact with you from your bank? Well, I presume it's probably 2 or 3 months, and you'd probably be doing pretty well if you actually knew his name. Yeah. Your payments, your account statements contact you every month on a daily basis most of the time nowadays. It is your calling card.
Absolutely, very good summary. But let me go back specifically to your role, and again, you already very well described what's going on in terms of cost, reputation at banks, etc. Can we go now to solutions? Can we go back to technology solutions, processes, best practices? So I would like to hear from you, Roland, these best practices that you see in the market, and then I would like to move to Judy and Deep to add more color to that aspect of improvements and best practices.
Absolutely. Well, especially when it comes to exceptions, one of the biggest difficulties that we face is that a lot of banks are still doing that process completely manually. That's indicated also to a certain degree by the amount of free format messages that are in circulation. And maybe Joe can come back later on and give us some information on that, because it's actually shocking. The next thing is that these different payment rails specify different rule books. So if you look at something like SEPA Instant, they have a very specific rule book which tells you how to actually address a payment exception. It tells you which message to send when and in what case and what are the response times. If you look then at CHAPS in the UK with their instant payments, they do the exact opposite. They say, we want nothing to do with that at all. It's up to you to have bilateral agreements. Yeah. So this makes it very difficult. And so even if you have a good payment gateway, most of the time they actually only focus on payment execution and not the processing of exceptions. Yeah. And so really where it becomes interesting is when you have, like we have with APC, an umbrella of exception management across all the payment rails. So it's able to manage multiple types of different messages and different messages formats, because you might have to translate between them depending on who you're speaking to. It also eliminates the manual execution of these messages. So when you talk about a free format message, someone is actually typing a message to another bank, or they might be typing an email internally. If you look at the anatomy of an exception, these manual parts, account for about 60 to 70% of the effort, and they are actually quite easy to replace. Yeah. In most cases, payment exceptions are common. The type of exception is common across all the different payment rails. So it's just a question of introducing standardization, a same way of working for the same type of exception, and making sure that people are not having to do really potentially useless manual work of typing a message. They should be thinking about how to solve the problem, not trying to communicate about the problem. So that can be done quite easily, and there are technical solutions out there that can do that.
Fantastic. And let me go back, Judy. What else do you see specifically on the solutioning best practices to address these points?
Sure. So I think the points Roland mentions very relevant to banks, right? So, but on top of that, I would add a few other things. One is scalability. We all know that traditionally the bank platform sort of handles roughly 50 transactions per second or less. So that's more than enough, right? Without instant payments. Now, with instant payments, that's far from being enough. So instead of fixing things here and there, which will mean the higher cost and the slower time to market, we have to, it's a matter of time, and we have embarked on a journey to modernize the platform, to really push the TPS transaction per second to potentially 5,000 or even higher, right? Without that fundamental engine capability, there's no way we can support instant payments in this scale. We heard from Joe the fast growth of instant payments. We have to get ready. That's one. Two is, again, we mentioned a lot about 24/7. We are as strong as the weakest link. The point is, how do we look at end to end to see, even perhaps one strong engine is not enough. We have to look at end to end. What about a balance system? What about liquidity system? What about other system? How can we make it work end to end in a few seconds? And we're also think about relook at things instead of doing incremental enhancement 2.0. We're relook at all the workflows to see what can we do to better balance the risk control aspect and also the speed. So when it comes to sanction screening, AML, etc., can we do risk-based sanction screening? Obviously, if we do that, it has to be really careful, has to get all the approvals. The flow needs to be very safe and sound. But potentially, that could help us move the needle a little bit more. So I'll just add those a few points.
Excellent, Judy. Excellent. Cannot agree more. And Roland, prior in his excellent summary of what are the technology solutions that he's seeing, mentions that Joe could add more color with his analysis. What aspect would you like to add based on your research with so many banks?
Well, I think Roland really did summarize it very well. I think having these standardized rule books is going to be incredibly important. As you said, some of these, like the Fed now uses them, Super Incident uses it, but CHAPS doesn't. And so, we can't really live in a world where we don't have these rule books for exception handling. So if we could have a universal rule book that everyone could agree on for handling exceptions, I think we would go a long way into solving some of these bottlenecks. And I think doing away with this free format messaging as well will be essential. So having these unstructured communication methods, it's incredibly time consuming to have these manually typed out to address these issues. And so if we can somehow get rid of these, then again we can unlock or we can remove that bottleneck for which is acting as a limitation on the potential for automation.
Fantastic. Now let me go back Deep with the magic word automation. Okay, is present in any conversation with customers, also internal. How do you see specifically automation improve the efficiency of these exception handling processes? Have you seen any specific workflows or tasks that you have particularly witnessed that has been automated? What analytics could add significant value? Okay, Deep, what is your practical experience on this field?
So automation in the efficiency of exception handling has been existing from the traditional payment rails, right? And we have seen a lot of applications of machine learning, artificial intelligence, robotic process automation over the last few decades. I think with instant payments, we're going to see just take automation one notch higher, right? So the newer world of automation is really very low code or no code solutions, which are tightly integrated with business processes. So definitely automation plays a huge role in bringing the observability and monitoring into the end-to-end payment experience, the way Judy mentioned. So definitely we are seeing use cases in terms of the simple use cases or automated data verification, automated data corrections. But the sophisticated ones are where we are trying to automate the business decisions and optimizing the models to handle false positive. That really improves the efficiency of our fraud detection and fraud monitoring capabilities. We are seeing notifications and alerts that are going to broader issue management teams. Today, if we talk about any problem incident management scenario, we're talking about pulling in 10 to 15 different teams. So how do we bring them together faster, quicker, and equip them with the right information to triage the exceptions is really the automation kind of enables that front. And not to forget the feedback loop, right? When the problem and the incidents or the issues are handled, there is always a need to do root cause analysis. So like Joe mentioned, a lot of the reasons are really sitting in the unstructured text format. So how can we add more analytics on or the text analysis capabilities to identify those patterns and prevent the future occurrences of those exceptions is going to be very, very critical in the success and add more value to it. Other than that, I think analytics broadly, just being able to have various portals with dashboarding and trend analysis capabilities, whether it is operations, we're talking about fraud operations, whether it is risk management, liquidity management area, or even technology operations. I think visibility into just trend analysis is going to help significantly in improving the efficiency of exception handling.
Yeah, I'm building on what here we're mentioning. Roland, I would like to put some numbers to the words, okay? Based on your extensive experience from 1 to 10, at what level do you see automation at banks? And what specific aspects do you see that there is enough room for further improvements?
So I think it's always a question, what type of organizations are we talking about? Right. So, I mean, if we're talking about the organizations here like Truist and Citibank, I'm quite sure they've invested significantly in their payment processes. I think, though, it's a very different case as soon as you go to the tier 2, tier 3 players, because this has always been a very expensive thing to do. Yeah, but ultimately they have to give the customer the same product that the others do. Yeah. So I think if you're talking about that sort of a market, I would say we're nowhere near 50% automation at all. Yeah. And that's also indicated if you look at, just as an example, Swift, which obviously is not an instant payment system, but if you look at Swift, I think in Europe, over 70% of the banks still use free format messages. In America, it's shockingly high, it's over 80%. Yeah. You know, then you see the emerging markets, which have sometimes leapfrogged. So the Middle East has, interestingly enough, the lowest amount of free format messages. It's only 50%. So, you know, it really depends. And so in taking that into account, you know, there are some things that will help in instant payments specifically. It's the pre-validation, okay? Where you're pre-validating client names. I think that will be a significant help. Yeah. And that will help reduce those things. But on the other hand, it's very simple stuff like I was mentioning before. It's all these manual processes in between. There are so many banks where, as an example, they get an inquiry from another bank and they still have to go and actually go to another system and fish out that original payment to see what it was like and to, you know, to understand what it was. And that just takes a huge amount of time, yeah, and it adds no value. You know, that should be automatically presented to the guy doing the exception. You know, it should automatically populate an answer or an answer message. The bank should be using the codes, etc., to automate these things, which, you know, have been around for a long time, but it's just a lack of investment, yeah. And I think, you know, just to show the indication of that, I mean, in Europe, there is a lot of legislation coming around instant payments. For a lot of the people adopting instant payments in Europe, it's going to be a double-edged or a double whammy, because not only are they saying you should be doing more instant payments, they're also dictating at what cost. So, you know, previously where it might have been an opportunity, okay, now you're being told that it's not allowed to cost a lot to do an instant payment. So those things are really important. And that leads us to analytics. Again, the larger banks have very sophisticated analytics. We have customers, you know, when we tell them, well, look, with an exception management tool, we'll be able to tell you exactly which correspondent has the most payment failures, which correspondent takes the longest to fix it, and which correspondent costs you the most. They think that's already huge. Yeah. So I think, you know, there's still a lot there to be done. And, you know, it's good actually, because I think payments was for 25, 30 years pretty dormant. And in the last 2-3 years, every event I go to, it's just payments, 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 payments. So that's a great thing from that point of view.
Absolutely. In these events, Roland, I'm sure you have heard another magic word, which is ISO 20022 in these events that everybody was talking about. So let me ask Joe specifically about how the implementation of ISO 2022 standard affected the payment processing and exception management specifically.
Yeah, that's a really good question. So look, ISO 20022 is a global messaging standard. It was introduced really as a significant step towards enhancing interoperability and consistency in cross-border payments. You know, the standard allows for a lot richer and more structured data, which can certainly improve the efficiency of transaction screening compliance processes. But in reality, it's actually introduced increased complexity. And I say this because, you know, while a lot of payment systems have adopted ISO, you know, 20022, they often use proprietary variations. So whereas the standard standardizes the messaging format, it doesn't regulate the syntax. And so the interpretation and use of the rich data fields can vary significantly among systems. And then that ends up leading to inconsistencies in information, which has created some issues.
Yeah, yes, absolutely, absolutely. ISO 20022 is here to stay. So let's see how all this messaging adapts to solve a part of this problem. So as we're facing the last part of the discussion, we already mentioned several keywords: automation, digitization, ISO 20022, etc. Let's bring another magic word, which is AI, artificial intelligence, and blockchain. So it has to be present in every conversation. But let me ask specifically your views that you have on these technologies, specifically for to solve part of the issues related to payment exceptions today. So let me go first to Roland, and then we'll allow Judy and Deep to jump in on their views as well.
Well, I mean, I think there's hardly a conference I've been to where nobody's talked about AI. Again, it's on everybody's lips, yes. And of course, there's a huge potential behind AI. I think, however, there are two things to keep in mind. If you're talking about AI that everybody's been talking about for the last 12 months, they're talking about generative AIs, things like ChatGPT, Copilot, etc. The adoption of that type of AI, I think, will be not as easy in an executional business or an operational business as people think. You can use it to give you interpretations of data. You could use it maybe for MIS. But in actual executional data, it becomes a bit more difficult because you always have to actually be able to justify why the AI reached a certain decision. And these generative AIs are not particularly transparent. In actual fact, most of it is algorithms. And unless you want to employ data scientists to understand what an algorithm decided for a specific transaction, it's going to be quite difficult to explain that to your auditors and compliance. Yeah. But there are very specialized AI components which are transparent. And there's a lot of good vendors out there. We also have our own innovation labs that build their own AIs, and with the intention of always making it exactly visible why an AI did what it did. Because we need that in order to justify it against audit and compliance.
Excellent. Judy, sorry, please finish, Rob.
The last thing was just because you asked me about blockchain.
Blockchain, well, I think, yes.
Yeah, blockchain, again, is a technology, huge, has huge capabilities. Do we need blockchain in payments? I'm not sure. I mean, instant payments, digital payments are nowadays so fast, so effective. I'm not really sure if there's a reason to try and replace that with blockchain. Yeah. Maybe someone finds that reason, but the thing that I've been seeing with retail payments and central banks at the moment is they sort of tend to all be doing their PLCs and saying, well, actually, we don't really need a CBDC for retail. Maybe for trade finance, assets, things like that, but not necessarily for retail. I hand it over to the rest of the jury.
Yes, Judy, anything to add on emerging technologies?
I can add a little bit. Sure. I mean, we have seen how technology changed people's life, make our life a lot easier than before. That will continue to happen, maybe in an accelerated fashion. And I completely believe AI will have a huge impact on everything we do, including payments. Now, today, we're not there yet. I have not seen an AI being used, leveraged in an impactful way. It doesn't mean that we will not get there. I think a little bit similar to how we get used to understanding of the DLT. Some use cases we might not need DLT, others might be helpful. The same thing for AI. I think we need to continue the journey. I'm sure in a lot of banks and players are doing this already, forming working group sessions, exploring different use cases to see how, where is the best use cases for AI and how can we apply in a scalable way. I think we have been embarked on a journey, but we're not quite there yet.
Lovely. Deep, anything to add?
I love how my co-panelists have given us a realistic point of view, I 100% agree with them. So I will not mention AI or Gen AI, but what I would like to mention is the technologies that we are currently seeing, and we in a couple of years will definitely continue to see. What we will continue to see is more customer-centric self-service tools. How can we take the load off the banking operations, whether it's branches, digital channels, or backend services? How can we offload all of that and put the technology in the hands of consumers so that it's easy to use and intuitive? And certainly, we're definitely going to see a lot of that. We are going to see QR code adoption, biometric adoption in terms of helping enhancing the security and reducing the fraud. And I'm hoping that we also see a better cloud computing solution for banks, which means more data privatization, enhanced cybersecurity protocols, and our ability to scale infrastructure in line with the growth that we expect. So that's my 2 cents on what we are seeing in the interim as emerging technologies.
Fantastic. So we're wrapping up, and people say that tend to remember the last remarks of a webinar, second, the beginning of the webinar, and third, the core of the webinar. So I would like to ask, very succinct, to mention 2 to 3 advice or core learnings in your journey, specifically on the operational aspects. Any advice you could give? So I will ask the same question. I would appreciate if you can be very, very specific about 2 or 3 quick points. So let me go in this order: Joe, Deep, Judy, and Roland. Okay, Joe first, please.
Okay, so very quickly, so as well as the emerging technologies that we just discussed, and we have discussed this throughout the panel, but I would say it's, having that standardized approach towards ISO 20022, having university agreed standardized rule books for exception handling, doing away with free format messages, that would all lend itself a lot more towards increased automation, which is what we want.
Excellent. Deep, please.
From operations perspective, I think what is important is efficiency, scalability, and accuracy.
Fantastic. Efficiency, scalability, accuracy. Thank you. Judy, what is your view?
I think we can make better use of data. Data can enable speed. Data can enable many things, and we're not doing we are not today. We're not making full use of data yet. So let's look at data.
Absolutely, great point. Roland, your final words.
Well, I think the most important thing is, yes, automation, it's standardization. You don't have to learn these things by yourself. You can learn out of the mistakes other people have made. You don't have to do it in a proprietary way, because a lot of the time that does not give you a competitive edge. So that's why there are companies like us around there. But I think most importantly, after all these years working in operational control, is don't look at your operation as being a cost. Your operation is the product that you serve to your clients. Okay? It is your opportunity. And in many cases, you could spend hundreds of millions having NEMA in your advertising, and you get loads of new clients. But as soon as they experience your operation, they're going to jump off again. So it is really important what you actually deliver to the clients. Absolutely.
Excellent that you highlighted the importance of operations in transaction banking, in payments. So is part of the solution, of the essence of the payment. Definitely. So final words from my side. Thank you very, very, very much for being so open and candid. I'm sure you have planted some seeds at some people with some concepts and experience that you have so far. And all the best in your future payment exceptions improvements. And that's the end of driving operational excellence to meet customer demands in an area of instant payment. 1 out of 4 payments is a very important topic. And all the best to all of you.
Thank you.
Thank you.
Bye-bye.
Bye.
That was a great discussion. Many thanks to Adolfo for moderating today's webinar, and a big shout out to our panelists for their valuable insights. To our audience, thank you for your active participation. We've received quite a lot of questions throughout this hour. Now, for any unanswered ones, rest assured we'll be reaching out to you via email in the coming days. And don't forget to keep an eye out for the email containing today's session recording within the next couple of hours. Finally, on behalf of SmartStream, once again, thank you for joining us today. Wishing you all a wonderful day ahead.